Welcome back. I'm Pratap here. Today is 25th March 2025. In this video, let us evaluate the performance of high liquidity zones, and also we will look into the lesson 29.5. We have analyzed Nifty supply demand zone chain. What kind of opportunities it has given during the last 2 days. Let us focus on that. Even before that, all of you please note we are providing complete free training on supply demand zone price action. You might be knowing the cost of the training is over 8,000 US dollars. It is a highly expensive training course. Even then, we are providing complete free training, and all the training lessons are available at our NeoStock YouTube channel. So you can access all the training lessons at our channel by clicking the tab posts. Some of you might be seeing the tab community here. Click on the community tab. You get access to this post. This post is having a YouTube playlist link that will take you to all the training lessons. You just click the link. Now we are into supply demand zone price action course. In this YouTube playlist link, I provided all the training lessons. You just scroll down to the bottom of the page. Here, starting from lesson 1.1, all the training lessons are placed in an order. So please go through all these lessons one by one. But according to my training instructions, they are available at our Telegram channel. I provided the link to our Telegram channel in this video description. So go to the video description, join at our Telegram channel. Then you can find at the top of the Telegram channel window, you can find pinned messages. Click on the pinned messages. One of the messages in the pinned messages is about training instructions. So please follow all the training instructions and learn this course according to those training instructions. Then you will become a very good independent trader. Please make use of this opportunity. Okay, now let's get into the analysis of the high liquidity zones. Yesterday we identified 1, 2, 3, 4, 5, 6, 7, 8 high liquidity zones from daily and 75 minutes time frame. We got 4 trades from 2 stocks and 3 are successful and 1 is stopped out. Before we discuss into that, let us look into Nifty supply demand zone chain analysis we did in lesson 29.5. The last Saturday we have analyzed Nifty supply demand zone chain, how to use Nifty supply demand zone chain. Especially the fine-tuned 5-minute zones or the 5 minutes high liquidity zones will give you good intraday trade opportunities. What kind of opportunities it has provided, let us discuss. See, here we have the 5 minutes high liquidity supply and demand zones. Here we have a 5 minutes zone, here you have a 5 minute zone, and then you have another 5 minute zone. This is the origin for this entire weekly zone. So we have 3 opportunities are available here. So what kind of opportunities it has given on Monday and even today? See, yesterday it gave you the first opportunity. Look into this. We have a 5 minutes high liquidity zone here. This is the first 5 minutes high liquidity zone. And this is the one executed yesterday. Price entered into the zone. At 2:20 yesterday, 2:20 time interval, prices entered and then reached till the 15 minutes target zone. What is the 15 minutes target zone here? Here you have a 15 minute zone. The rally base rally. This is the one. Keep on holding the prices. First time, second time, and third time it reached our target. Today also 4th time this is the one gave. And finally today, end of the day, slightly, this is the one violated. But even then, first we got a trade. How much RR it has given? 1:3. Actually, it is a fine-tuned RR. Why fine-tuned? because we have not taken exactly at the proximal line. A little inside we have taken, because exactly proximal line we are getting only 1:2.6 or 2.7 RR. So to get 1:3 RR, lightly we took the entry little inside the zone. We adjusted the short position trading view tool, so that the place where exactly it is giving 1:3 RR, that is our entry. And including the stop buffer, this is the stop loss, and the zone is, the 5-minute zone is slightly pierced. It is within the stop buffer, and then price has started moving and finally reached the target at 15 hours yesterday. So this is the way this zone has given around 60 points return. Yesterday you would have gained 60 points using this supply demand zone chain. Can we take another trade here? No, because it is already pierced. Now there are higher chances the zone will be violated. So that way you have to remove this. Okay, after that, today morning, prices entered into the second zone. The second 5 minutes high liquidity zone. This is the one. This is the area we got the trade today. But this is looking like morning 9:15 candle, right? But not morning 9:15, 5 minutes candle. 1 minute candle, you can't take the trade. Intraday trades, morning 9:15, 1 minute time interval, we are avoiding mainly due to gap up and gap downs related scenarios. That's why we can't take trade at 9:15. But prices entered even 9:16 also. See, this is the 9:16 candle. So that's why definitely you would have taken a trade here. After that, prices came down and finally reached 15 minutes target at 9 o'clock 26 minutes. Which has given you 1:4 RR. Maybe some more you waited, maybe some more profits, maybe around 90 points profit it has given. If you would have waited some more time, maybe 100 points also, you would have got the profit. But anyway, what is the 15-minute zone here? So this is the area. Consider a failed ERC leg in base and rally with hidden body. And after that, what happened? This zone is violated. If you would have taken second, because sometimes intraday it will give you second trade also. But it is in case if you would have taken second trade, your trade would have been stopped out. But that is okay. But the biggest upset is this is the one, this 5-minute zone is violated. And those who took the trade here first time, your trade would have been stopped out. Actually, this is a very good zone. Why it is a very good zone? Because this is the 5-minute zone. This 5 minutes high liquidity zone is horizon to this weekly supply zone. See, this is the origin. Weekly orders picked up from here and came down. Let me zoom, you get better clarity. See, from this 5-minute zone, the weekly zones are picked up and then entire weekly zone formation took place. Such kind of zones will give you very good profits, because which concept it is? Lower time frame zone origin to the higher time frame zone. Lesson 22 concept. It is supposed to give you huge profits, but unfortunately, today, this is not a good area for us. All those who took the trades, your trades would have been stopped out here. After that, it went some more and then finally came down prices sharply. But our 5-minute zone is violated. So we have to accept this stop loss. So here you would have got around 60 points profit. Here you would have got around 90 points profit. But this is the one would have been stopped out. How many points you would have got the loss? Let us calculate. 31 points, but stop buffer also you need to add. Stop buffer around 7 points, but we are rounding the value to 10 points because recently I explained the concept in one of the HLQ zone. Please look into last 3 or 4 days HLQ zone analysis video. One of the videos I explained stop buffers, rounding the values when the value of that particular stock or script is very high. So Nifty, the rounding the value like 5 rupees you can add to the rounded the values, the nearest. So 7 rupees means another 10, so rounding 10 rupees. That way you can, your Nifty it is 10 points. So plus 10, you got 41 points, loss you would have got. But you have to accept. The risk is also high in this zone. Maybe risk management point of view, if you would have taken a trade a little inside by fine tuning the zone, that way your loss would have been minimized. But maximum possibility 40 points. If it is beyond 2%, you will move a little inside and plan your trade. But anyway, these are the trades so far executed from our analysis. And one more point, the main reason why I am explaining on this is go to the weekly time frame. Here we have a weekly zone. This entire thing is weekly zone. Rally base drop is the weekly zone. This is the one. Weekly supply zone. Before this zone is pierced, the trend, weekly trend was sideways. Now by piercing this zone, now weekly trend is changed to uptrend. So this is a major significance you should observe. Daily trend is already uptrend. Few days back when a daily zone is daily supply zone, this daily supply zone is violated, trend is changed to uptrend. 2 daily zones are violated previously. Today also daily zone is violated, anyway uptrend will be continued. Already it is an uptrend, daily supply zone is violated today, still uptrend will continue. But by this weekly zone is violated today, pierced today. So trend will be changed to uptrend, weekly trend. So that way by violation of this uptrend, by violation of this weekly zone and move to the uptrend, now Nifty WIT trades are enabled. This is the point you have to observe. Weekly income trades are enabled because of bullish trade setup. Now the trend is up, now bullish trade setup is enabled. Now WIT Nifty bullish trades we can plan now if any trade opportunities. And what about daily time frame? Let's go to the daily time frame. Here we have a daily zone also. See, this is the daily zone. And daily candle is closed above the daily zone. That means this daily HLQ supply zone is no more valid. I am deleting this. And these are also zones gone. Whichever the zones got deleted, I am removing them. 25-minute supply zone, high liquidity. This is maybe high liquidity supply. I didn't write HLQ. This 5-minute zone is gone. This 5-minute zone is also gone. HLQ zones. Weekly zone still we are keeping because it is a pierced zone. If maybe tomorrow, if this zone is maybe by end of the week, if this candle is closed, the weekly candle is closed outside the zone, we can delete the weekly supply zone. Until then, it could be like a pierced zone. All these order flows are gone now. And the next order flows are in this area. How bullish it is. Who is the reason for making such a bullish? This is the one. The pierced zone strategy from weekly demand zone. Weekly demand zone is a pierced zone. Inside the weekly demand zone, new order flows are created. In that new order flow, prices picked up the orders and then this entire move started. See the power of the pierced zones. Let us see what will happen. This weekly supply zone is going to be a pierced zone or it will be completely violated. That we will know by end of this week. Because weekly candle will be closed only at the end of the week. Until then you have to wait. If any new order flows are created and further push it down, maybe next retracement, maybe those order flows may work very strong. Again push the prices to monthly demand zone. That possibility is there. Another possibility, weekly candle will be closed outside the zone. That way this entire weekly supply zone will be gone. That could be another possibility. At the time, these order flows, these supply zones will be playing the major role. But as on now, 2 trade opportunities we got successful and 1 trade opportunity is stopped out from our analysis. Nifty supply demand zone chain analysis, this is what you should conclude. Okay. Now let's get into HLQ zones. So the first one we got the trades, 2 trades we got, REC Limited, we got 2 successful trades. And this is a daily high liquidity supply zone. How our software identified? Drop, base, drop. And from this zone it prices went and again while coming down, again another 75-minute zone is created here. That we will see. Now I am going to the 75 minutes time frame. In the 75 minutes, see at the distal line, there is a rally, 2 base candles, a drop candle is created. This zone is a high liquidity zone, 75 minutes high liquidity zone. This is overlapped at the daily zone. So that's why within this zone order flows are also very, very important. How we can say it is a high liquidity? Because this zone is already tested several times. This is one area, this is one area, and today 3rd time. Okay, so this is 175-minute zone, rally, 2 base candles and drop, and there is another 75-minute zone here, rally, 2 base candles and drop. So we have 2 order flows. So I fine-tuned both these zones with 15 minutes time frame. In the 15 minutes time frame, see, I consider this as a failed ERC candle as a leg-in, rally, base, 1 more base, 2 base candles and a drop candle. This is the 15-minute zone I have drawn. And also here also there is 1 15-minute zone I have drawn. Drop, 1, 2, 3, 4 base candles and a drop candle. This is the 15 minutes and good follow-through candles. These are the 2 15-minute zones. Again, these 15-minute zones are fine-tuned with 5 minutes time frame. Here you see failed ERC, rally, base, drop, we can draw. If you draw a zone, here also again you see rally, base, drop. This is the origin. From this origin, it picked up the orders and a new 5-minute zone is created, LOTL. And if you draw one more zone, both are overlapped and your risk management is very high. That's why 5 minutes LOTL zones, the main origin we are planning our trades, mainly risk. So that means next time also you should plan your trade in this zone. If you have any entry buffer, you can add some entry buffer. Because of this zone, sometimes price may not reach up to here. Before itself, it will push. So that's why make sure add some entry buffer and also make sure risk beyond 2%. That way you can plan trade in this zone. That is the trade plan. And what about the other 15-minute zone below this? Here in this 15-minute zone, you see, you have a rally, base, drop. The question is it a tiny candle or is it a medium candle, medium size candle? Okay, here you have a, maybe this I considered as a leg-in. Here prices moved in a narrow range, 1, 2, 3, 4 base candles drop. So this zone I have drawn here. But here also this candle is looking bigger, this drop. And here this candle should be considered as a medium size candle or a base candle. Another question mark. Medium size, if it is a tiny candle, okay, entire zone will be a base candle. If it is a medium size candle, you can't consider this as a base candle. Before there is a base candle, you can add part of the base. But this is the only one candle is there. Lot of confusion is here, right? That's why went to the 3 minutes time frame. See, whenever we have confusion in taking a decision at 5 minutes level, the alternative is 3 minutes. You can use 3 minutes as a supplement to the 5 minute zone. So go to the 3 minutes. Now you get perfect clarity. This is how you should analyze your charts. See, when 5 minutes zones, you have some clarity is missing. You have a doubt either side. Whether to consider base or to consider leg. Once you have such kind of doubts, better take the help from 3 minutes. Excuse me. Now 3 minutes you see here. You have a drop, you have a base, you have, maybe you can keep this also as part of the base, but imbalance started from this. This is the actual leg out. This is the actual origin. Drop base, drop continued from this because imbalance continued because the time interval is over. But the continuation is also reflected in this candle. That's why you can say drop base, this entire thing is a leg out. This is how you have to understand the balanced area and imbalanced areas. Anyway, once your experience grows, you get the perfection in drawing the zones based on the imbalance techniques. Okay, but here you see, this is a failed ERC, clear, a large candle, drop candle, two base candles. See here price is in a balanced way. Now a drop candle. This is also a large candle. So we have two order flows. And today we got two trades from the first zone. See what happened today. Prices entered morning 9:15 candle and sharply reached the, here we have a 15-minute zone and 15-minute zone is violated. Okay, we book the profit here, but it is violated. Next time you can't use this 15 minutes because this zone is gone. The next we have one more 15-minute zone. We got a second trade. Second trade, the target is the second 15-minute zone because the first 15-minute zone is gone. Okay, go to the 15 minutes time frame, you get clarity. You have a rally, base, rally. This is the one. See, we got the entry and reached the target, and the next candle, this is violated. It's gone. But the problem is here, we are not getting 1:3 RR. You are getting around 1:2.5 or 6 RR we are getting. That's why what I did, took the entry, I fine-tuned the entry a little inside. The moment I moved a little inside, now we got 1:3 RR. Luckily, prices also reached in this area and we got the trade. But is it morning 9:15 1 minute candle or after that we got the trade? We got two trades here in this candle. One is morning 9:15 1 minute candle. We can't take the trade. Next again after few minutes, once again prices entered. Go to 1 minute, you will get clarity. So see, this is the 1 minute zone. This is the morning 9:15 1 minute candle, 9:15. You can't take trade in this candle. After that prices came and again prices moved up. See, you got the trade in morning 9:18 candle. This is the morning 9:18 candle. Even 9:19 candle also prices went even more deep inside and then prices came down. And finally reached the target at morning 9:26 candle. So less than 10 minutes, your trade is completed. Less than 10 minutes. After that, this zone is violated And then again prices moved, and again once again you got second trade at morning 9:56 candle. And after that prices reached and finally reached this target. 13:29 candle. 9:55, almost close to 10 o'clock. 9:55 to 13:30. So almost 3.5 hours you would have hold. If you would have holded, you would have got profit. Maybe some people may exit a little by keeping buffer. Maybe you might have exited at 11:50 itself. If that is the case, within 2 hours you would have closed this trade. Generally we keep some buffer before to exit the. So those people would have exited here. Okay, for statistics point of view, it reached the second 15 minutes target. So this is the way REC Limited has given you two trades. First trade gave you 4,900 rupees profit, which is 4% ROI. Second trade gave you 9,250 rupees profit, which is 7.5%. These are the maximum possible returns. I know some of you would have exited and booked the profits. Maybe some people will book the profit after reaching 1:3 RR. Some people book the profit after reaching 1:5 RR. Some people may book the profit after reaching 1:3 RR. Any trailing stop loss violated, probably you might have exited. These are all different strategies you follow. Or maybe some people with patiently till it reached the 15 minutes target, you might have waited and finally resulted. These are all, see where you exit, they're all depending on your trader's psychology, how your mind reacts at that time. Okay, for our performance statistics point of view, it reached the 15 minutes target. So that means this is the opportunity our trade, our high liquidity zone gave you today. In this opportunity, how much you grabbed, that is depending on your trading psychology. But our zone has given, our software has given a good opportunity. And how much opportunity it is given, that is what we are mentioning in our Excel sheet. So it has given you a 7.5% ROI opportunity, it is given you till 15 minutes zone. Okay, these are the two opportunities from REC Limited. Next one is Naukri. Naukri has given you two opportunities. One is stopped out and another one is gave you very huge profit. And this is also a daily high liquidity supply zone. How our software identified rally base drop. And this is having a 75-minute zone. A rally 1, 2, 3, 4 base candles and a drop candle with hidden body pro gap. This is a fine-tuned 75-minute zone. Inside the 75 minutes, you have two fine-tuned 15-minute zones. This is the first 15-minute zone rally, 1, 2, 3 base candles and a drop candle. Maybe legout might be a little shorter, some of you may feel, but okay, we can compromise as long as we get a fine-tuned 5-minute zone. Always remember, sometimes you may compromise and draw the zones. It may be a little shorter or maybe exactly legout might be valid. But as a human here, clearly we are seeing imbalance is taken place here because here prices moved in a narrow range. This is the area prices moved and this is the area imbalance started. So that way this is a valid 15-minute zone according to me. And also you have one more 15-minute zone here. You have a rally 1, 2, 3, 4, 5, 6 base candles and a drop candle and follow through candle. If you hide the big candle, you get clarity here. So you have two 15-minute zones. Actually, I consider this as a rally. This is the medium size candle rally. Let me hide, you will get clarity. Rally, two base candles and a drop candle. That way I have drawn this 15-minute zone. Now both these 15-minute zones, again you need to fine tune with 5 minutes time frame. Go to the 5 minutes time frame. Here you have a rally, base, drop and follow through candle is there. 5-minute zone. This 5-minute zone is the horizon for this entire 15-minute zone. Lesson 22 concept. Lower time frame horizon to the higher time frame 15-minute zone. So in this horizon we can plan our trades. And what about here? See, here you have a failed ERC candle as a leg in, base and drop with hidden body. This is the 5-minute zone. Or maybe some of you may say, okay, let me consider this is a base candle, 2 base candles and a drop candle. And some of you may say this is a big candle, some of you may say medium sized candle. This is the tinny candle. So that's why some kind of confusion is here, right? To overcome that, what I did, I went to 3 minutes time frame. I also want to take help from 3 minutes. So that with 3 minutes we get better clarity in that area. And see, 3 minutes you have a perfect zone. See, this is a rally candle, failed ERC as a rally. You have 2 base candles and a drop candle. And this is the area I have drawn the 3 minutes perfectly. Now see what happened today. The first one is violated. The blue color line what I have drawn, that is the stop buffer value with stop buffer. So stop buffer is gone. That means our zone is gone. But just above there is one more. See, if risk is managed, you can combine both these zones. Both are like LOTL zones. They are near to each other. If the risk management is not easy, it is beyond 2%, take 2 as an individual trade. Luckily, suppose if this is worked and prices came down, your trade would not have been stopped. And you exit blue color line, again you pick up another trade here. So these are the 2 different ways you can apply the strategy. One strategy is combine both the zones. If risk is beyond 2%, you can do position sizing and you can plan your trade if you are in the cash segment. Second possibility, you consider this as a separate trade. If it is stopped out, you exit at the blue color line. Again, if prices reaches here, take another second trade. Many of you say both are very close to each other. That's why you will be combining both if the risk is within 2%. Beyond 2% only you have to apply different strategies, whether you are using stop buffers, you are combining and using a position sizing, or as a separate trades you are taking, that is up to you. Okay, statistics point of view, I have to consider both as the 2 separate trades. First one is violated. So how much loss it has given? 2000 rupees loss 2028, which is minus 1.8% ROA, that is 1.8% negative ROA we got. So it is within 2% level. See, this itself almost 2% is there. If you combine both will be beyond 2%. Of course, cash segment you can do position sizing in the intraday. But F&O, unless you are a high value investor and buy so many lots, otherwise position sizing is not possible for us by buying one lot or 2 lots or 3 lots. So at the time you have to consider as a 2 separate trades. But where is the 15 minutes target? Here you have a 15 minutes. It reached the 15 minutes target. I know some of you would have exited at the pro gap area. Here you have let me draw a horizontal line. Some of you booked the profit in this area. I'm sure many of you would have booked the profit here. But it reached till the 15 minutes target. So that's why the maximum. First, I always give importance to 15 minutes target reached or not. Second, if till pro gap area 1:3 RR is there, whether it is reached or not, I will consider. If it does not reach, then minimum 1:3 it reached or not, I consider. If that also it did not reach, I consider that trade has failed if it is stopped out. Suppose sometimes price may not be stopped out, it will be staying here only. So wherever the near, at the time it will form some 1 minute high liquidity zones. So at 1 minute high liquidity zone, we will exit the trade and we will book small profits. That's it. This is how you should, the performance evaluation I will be considering. Okay, sorry. So finally it reached till 15 minutes target zone. How much profit it has given you? 24,228, which is 20% ROA. Exceptional scenario. Exceptional profit it has given Naukri. What I can say, this 5-minute zone is like a trap to this 5-minute zone, first zone. See what happens? The first one is violated. We all exit, book the profits. Institutions are capturing all our stop losses. And then they push the market down. So this 3-minute zone, actually this 3-minute zone is acting as a trap to this 5-minute zone. Okay. These are the 2 stocks gave you profits today. And remaining trades not executed, and a couple of stocks are violated, and we know they will be violated. Couple of stocks violated, and we know, as per lesson 16 concept, you know when a zone will be violated. So first let us look into those zones. So one is delivery. This is a 75 minutes demand zone. See, this zone is violated. Did I fine tune? No. Why? The 15-minute structure itself is not good. Look into the 15 minutes. See 15-minute structure. So many base candles here. Even if you consider this as a maybe failed ERC candle as a leg-in, this is a medium-sized leg candle. You can't consider this one. See, clearly it is visible. This is not the base candle, right? Or if you consider all these are all base candles, see rally candle, this is the big one. You have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. See, price moved in a narrow range. For 11 candles, price moved in a narrow range and then rally. What will happen? Such kind of zones will be violated easily. That is what happened today. Easily the zone is gone. Next, HL. HL is also same case. Go to 75 minutes time frame. Software identified rally, 3 base candles and rally. Fine tune with 15 minutes time frame. 15 minutes, maybe here you have drop base rally. The 15 minute zone, drop base rally. This 15 minute zone is again fine tuned with 5 minutes. Here you see you have a rally, 3 base candles and a rally candle. Maybe this, you may say this is a medium sized candle. Okay, it is part of the base. And this zone is fine tuned with 5 minutes. And this 5 minutes type 2 proximal. This is a type 2 proximal. The type 2 proximal is tested. When? Yesterday itself. Yesterday after it tested, see how sharply prices moved up. This is today. And this is not a fresh zone, this is a tested zone. We know this will be violated. That is what happened. Of course, today sometime it has given you some kind of support in this area, but not good enough to push the market. And now it is violated. Because it is a tested, fine-tuned 5 minute zone, we didn't plan our trade. Next one, HCL Technologies. This is a 75 minutes high liquidity supply zone. It is having a fine-tuned 5 minute zone, but a fresh zone. Let me show you. The 75 minute zone drop, 1, 2, 3, 4 base candles and a drop. This is fine-tuned with 5 minutes time frame. See here you have a rally candle, 1, 2, 3, 4 base candles, and an imbalance started from this drop and follow through. This is the 15-minute zone. Within the 15-minute zone, you have a 5-minute zone. Actually, first impression, the 5-minute zone structure is not really good. See, a lot of consolidation took place, right? Maybe I thought it is because of these gaps, structure is not clear. So I hide that candle. Even then, it is looking very, lot of consolidation. I thought maybe because of this huge big candle, the scaling is not proper. So even I hide that candle. Now you see. Now I got some clarity. See, this is a large candle. I thought it is a failed ERC rally candle. And here price moved narrow range in this area. Because moved in a narrow range in this area, this is the balanced area. Now imbalance started from this candle and follow through candles. So this is the area we have a strong institutional order flow. That's why I thought I can plan a trade in this area. But today what happened? Morning 9:15 candle itself it is violated. But this is a 5 minutes candle, right? Look into 1 minute. 1 minute also you will see morning 9:15 1 minute candle. See, this is the morning 9:15 1 minute candle. In this candle itself, this zone is pierced. Which zone? The fine-tuned zone and also the entire 75-minute zone. That means you can't plan any more trades in this zone. This is gone. Institutional order flow is gone. This is 9:15 candle. So these are the reasons. See, many times with the gap of what happens, the price goes beyond the fine-tuned area sometimes. Maybe this is the area, weak order flow is there, that's why it is gone. So because of these reasons, we didn't plan any trade in this. We can't take any trades any further. So that way, this zone is not valid for trading. And remaining stocks, idea previously itself we have fine-tuned this zone. I already explained idea, daily demand zone, drop, base, rally. Previously we have fine-tuned. Here I explained previously. We have an order flow in this area. Here we don't have a we have a 75 and 15. 5 minutes order flows are not good in this area. That's why we are not planning any trade here. Previously I explained. The dark green color, that is the area we are planning. But anyway, idea price did not reach that area. And next one is LFT, L&T Finance. This is also a daily high liquidity supply zone. It is like a drop, 1, 2, 3, 4, 5 base candles and a drop candle. How I fine-tuned? Go to 75 minutes time frame. In the 75 minutes, you have drop, base, drop, and also you have rally, 1, 2, 3 base candles and drop. Go to 15 minutes time frame. Within the bottom 75 minutes, the structure is not good. I'm not comfortable with this structure, so I left this. And this is the area rally, base, drop is coming. This is also huge risk here. Go to 5 minutes time frame, you get clarity. Here if you draw drop, 3 base candles and a drop, see the risk. So much risk. So you can't handle the trade. But it picked up the orders from somewhere. So that's why what I did, I went back and I saw here we have an horizon, 5 minutes horizon. See, we have failed ERC as a rally leg-in. You have a base candle and hidden body. At the hidden body, it's a drop candle, big, large. Already this is itself is a large candle, but some more body will be added, drop. Did you notice again rally, base, drop, LOTL zone is created in this. Maybe it could be a high liquidity zone. And then from this area it picked up, see the push, big push. So that means this is the origin. This 5-minute zone is the origin for entire daily zone. Probably this is the area we should plan our trade. That's the trade plan. But anyway, today prices did not enter into the zone. Candle did not enter. And next one is the PFC, Power Finance Corporation. This is also daily high liquidity zone. See drop base drop. And this drop base drop is fine tuned with 75 minutes time frame. Here multiple order flows are there. Rally base drop. This is the 15-minute zone. Sorry, 75-minute zone. And at the digital line, see this is the daily zone. At the digital line again you have a drop base drop. This 75-minute zone is the origin for this entire daily zone. But 75 minutes origin you can't plan trade. You need to fine tune up to 5 minutes. So that's why you go to the 15 minutes time frame. You need to fine tune at 15 minutes time frame. We have two 75-minute zone. One is in the middle and another one is at the proximal line. Sorry, distal line. See here you have again a drop base drop. This is the 15-minute zone we have fine tuned. And here again you see rally, two base candles and a drop and follow through candle. Here prices are in a balanced way and here imbalance started and follow through in the next candle. So these are the two 15-minute zones. These 15-minute zones again fine tuned with 5 minutes time frame. So I consider drop, base and drop. This is the 15-minute zone. Sorry. Oh, sorry, 5-minute zone, not 15 minutes. This is 5 minutes time frame. Drop base. Again we went to 15 minutes. Sorry. Oops, mistakes. Okay. Drop base drop. Higher wick of the candle. And here you see this is a drop base drop I have drawn. From here it picked up the orders. You can also draw like this. Risk is high. So what I did, I went to 3 minutes time frame. Time frame. See clearly we have seen drop base and a drop continued here. So this is the area risk management has done. From this area only, see it picked up the orders and prices came down. So that way I identified this is the order, institutional order flow. But anyway, today prices did not enter into this zone today. See today's candle. We didn't get any trade. So we discussed with this all the stocks we covered. So this is about the high liquidity zones identified and the trades we got. Hope this information will be helpful to you to gain some of your further experience. Let's all meet again in our next video. Thank you.